Hello and welcome to Connect, the weekly podcast for the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm very happy that you can join us today. Before I get to today's guest, I'd like to thank our 2023 President's Council sponsors for the incredible level of financial support that they provide to the California MBA in this important year. Those companies are AmeriHome, Arch MI, Consolidated Analytics, Funding Shield, Rocket Mortgage, and Western Alliance Bank. Thank you all so much for your continued support for the California MBA, and in particular, our legislative efforts throughout the year. And with that, I'd like to welcome to today's Connect podcast, David Smyle, who's Vice President at PSRS. David, welcome.
Hi, how you doing?
Good, good, good. Thank you so much for being our guest today. PSRS has a long history with California MBA, so I was happy that we could have you on today. Always like to get started out with little information and background as how people got into the mortgage industry. So tell us about your journey to the mortgage business.
Sure. Well, I started out in auditing with Firestone Tire from 81 to 84, and then I went over to Bank of America, again doing auditing, spent 3 years there, and moved over to Great American Bank doing auditing for a year, and somehow found my way into the commercial lending department as an analyst, and then into servicing and special assets and classifications, and never a loan officer. But while I was in the commercial side of the banking world, you know, I could see that those were the guys that were making all the money, the loan officers, and went ahead and got my real estate license in 1991, even though I didn't need it or couldn't use it because I wasn't originating, but I had it. And after the late 80s and early 90s, when all the banks were getting taken over and merged with other banks and closing, I had enough. And in 1996, used my residential license to start originating mortgages under a broker, and things started to go pretty well. And a few months later, I got my broker's license and started my own shop. So really 1996, 97 is when I first got started full-time originating commercial mortgages, and did that for 15 years under my own shop. And 2011 ended up joining a commercial mortgage banking company in San Diego, Churchill Mortgage, and was here for a couple of years before joining PSRS in 2013, and I've been here ever since, and really enjoy the whole vibe of the life company insurance world, along with all the other stuff we still get to do.
Yeah, you've had a long history with some and a lot of different experiences in the same industry too. So that's really interesting. So with rising interest rates and inflation, what asset classes do you see faring better than others perhaps in 2023?
Sure. Well, I mean, the two darlings of commercial real estate assets, as far as lenders are concerned, it has been and pretty much always will be at this point, multifamily housing and multi-tenant industrial. Strong demand for both asset classes. Anchored retail is a strong third. And after that, you get into some single tenant stuff that's got strong tenant qualities and length of leases. Strip retail, where like a strip center retail, where you don't necessarily have an anchor, but it's got a good mix of tenants, and it's multi-tenant. So if one tenant leaves, you still have many other tenants still able to pay the rent and pay the mortgage for the owner of the property. Probably the least favored right now is office, and I'm sure everybody can figure out why, with the advent of remote working starting from the pandemic, and people starting to enjoy working from home, or at least part or full time, and that's changed the way office is working right now. And many companies are downsizing or at least allowing employees to work part-time from home and part-time from work. We're seeing some large office buildings with pretty much vacant because their companies allow them to work from home, and I'm sure in the future when their leases come due, that if things continue to work out well for them on the remote side, they'll end up downsizing and removing their space. So that's a real unknown right now, is the office space. Hotels during the pandemic were a little bit iffy, but they seem to have come back strong now. So hotels seem to be in pretty good stead. Senior living still seems to be a big push for senior services, whether it's assisted living, skilled nursing, that type of product, although those are a little bit more hard to finance. A lot of the government programs are the best sources for that. And then you have your stuff like self-storage is also a very favorite property type. We kind of consider that industrial, but that's a very good property type for commercial lending. Then you get into gas stations and some of the more specialized things like daycare and things like that. Those are more specialized and certainly not the types of properties that the life companies that we represent go after. So back to your original question, multifamily, multi-tenant industrial, and anchored retail are your top three.
It's such a change to our culture that the COVID pandemic, created with the work remote, and we're all buying online, and some of that normality is coming back, but some of it's going to leave an impact with us for a while.
Right, and then you have the delivery services, the DoorDashes, the Uber Eats. People aren't necessarily going out to restaurants, which kind of hurts restaurants because they make a lot of their money on liquor. And if you're not there buying liquor,
things once they're there, for sure. Yeah.
Right. Of course, restaurants, you just don't know these days with the price of food up and rent up and having a hard time getting employees. That's a tough business to be in right now. So we're always kind of a little bit skittish on restaurants that don't really have a really good, strong history, especially through the pandemic. But we'll see what happens.
Right. So Pacific Southwest Realty Services, PSRS, has been, active with the California MBA, I think, since our inception almost 60 years ago. And last year, PSRS celebrated 50 years, which is incredible. Very happy for Dan Phelan and the Mulvihills and everybody. What can you share with our listeners about the corporate culture at PSRS that made them successful for so long?
Yeah, it's been interesting. I very much enjoy coming to the office versus working from home, which I could do. Part of the reason for that is it's very much of a team concept here. We have a lot of young guys who are with the company, either as analysts or as young producers, and it's important for them to be able to hear the conversations and hear what's going on in the office with deals. So we do a lot of on-hand training. We do conference calls with the whole company every week. We get together from time to time as a company for various events. We have an annual golf tournament that we have that we invite a lot of our lenders out to that the company participates in, but it's very much of a team building, team concept, information sharing. And to be honest with you, we have a lot of fun. It's a fun company to work for. Everybody enjoys each other's company, and I don't know that there's anybody here that doesn't enjoy working for PSRS.
Yeah,
good benefits, very generous with benefits as well. So it's a good overall.
It sounds like it. They've done a great job, and you kind of brought me to one of my next questions, just because you've had a long, successful career in commercial lending. What advice would you give to someone who's just starting out in this business, especially in a year like this?
Yeah, I would say, there's a lot of shops someone could maybe start with. I think it's important for them to look at opportunities with a larger company that can offer resources, training, conferences, seminars, anything where they're willing to spend money to help you move along in your career path, versus a smaller shop where you may be on your own. Maybe they'll pay bigger splits, but you don't necessarily have all that hands-on training and mentorship that you might get at a larger company, whether it's PSRS or another mortgage banking company, or some of the bigger shops like Colliers or CB or some of the other ones. But I guess for someone starting out, if you can get a degree in real estate in college, and if you don't, any sort of business or finance degree is a good start. I actually got my degree in finance, and while I was here in San Diego, went back to junior college and got an associate's degree in real estate. So it was all in efforts to not only get my broker's license, but improve my knowledge of the mortgage industry. So knowledge is key. Read books, read informational documents, surveys, forecasts, that sort of thing. Always educate yourself. You never stop learning, whether it's information on title, which is in our business, you still have to understand a title report and how to read it and what issues might come up when you're making a loan to a borrower on his property. If there's title issues, you not necessarily your responsibility to do it, but you're providing a service, and part of that service is trying to advise your client on any issues that may arise. So it's just an informational, constant learning environment.
Yeah, the fact that you can always continue to learn is advice for anybody, no matter where you are in your career, right? We can always learn something.
Yeah, I learn something all the time. I've been in business for a long time, but it's always something new. Whether it's a new loan program, whether it's a new law that comes about. Recently, LA just passed this law where there's called a mansion tax, where you have a large tax on the sale of properties, I believe over $5 million, that only affects LA, but it's important to our clients that have properties in LA. So again, this is always things coming up you need to be aware of, especially in your own market.
Right, exactly. Yeah, things that you can share with your customer base as well. You're of course on our board of directors, so I get to work with you in the leadership of our organization. And one thing I know that Dave Smyle is always good for is a good dad joke, always. So I've got to know, you've got to share with our listeners, what's today's dad joke?
Well, a friend of mine was suing the airlines because they lost his luggage. He eventually won the lawsuit, but he still lost his case. So.
Every single time. If you see Dave Smyle, you got to ask him for the dad joke because he will never let you down. He will always have a good dad joke for you. You are on our board, and I feel like, and Dan Phelan's been on our board. PSRS has always been big supporters of the California MBA, for which, of course, I'm very grateful. Can you share with our listeners why you're such a big supporter?
Sure. I mean, the CMBA is, to my knowledge, is the largest and most influential advocate for residential and commercial finance industry here in the state of California. And being in the industry, it's important for me to try and give back and be part of that solution or attempted solutions and trying to thwart some of the bad legislation that tries and sometimes does get passed in Sacramento. So anytime I can be an advocate for my own industry, and at the same time, it's very important for me to understand the other side of the book. I don't really know residential all that well because I don't have a license to do residential mortgages, nor do I want to, but it's important because a lot of stuff that affects residential could also affect commercial and vice versa. For example, trying to pass the split tax rule, it would affect commercial now, but once they get the foot in the door, then Prop 13 goes away for residential as well. So it's great to hear the perspective from our residential board members and understand their issues, and just everybody working together to try and get to a common goal, and that's to make the mortgage industry better for all, and to try and eliminate any things that might be a detriment to not only our livelihoods, but the industry as a whole.
David, thank you so much for being on the Connect podcast. I've enjoyed having you with us today. I appreciate your time.
Absolutely. Again, thanks for having me on. Look forward to serving on the board for as many years as my term will allow, and trying to help do my part.
Excellent, excellent. And thanks to all of you for joining us on Connect today. We appreciate that. If you'd like to access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.